Hey everybody, and welcome back to the channel. There's been a lot going on in the crypto market recently, so let's just dive right in. As you can see, looking at the crypto bubbles, we've got a lot of negatives out here today. Some of these, we got memes coming back. We've got some of our we haven't seen a ton of movement in a lot of our larger coins. There was a pretty decent bounce yesterday after the massive pullback that we saw, and so this is just essentially a retracement back from that bounce. So if we look over at the fear and greed index, we'll see that we're now back in fear. You see yesterday, we were actually sitting in extreme fear. So things have bounced a little bit back up. We're now sitting in fear. I think this is partially just due to the price stabilizing. As you can see over time, we had the Bitcoin price would drop very dramatically, almost, what was that? Almost $14,000 in the span of a day. Well, actually, no, it was about a week, but a very large scale price drop that we've seen. So, this has started to bounce, I think, purely out of just some level of relief that we're not continuing to go further down. So moving over to the crypto markets RSI heat map, we can see these have continue to come back down into the weak and oversold territory. These did bounce a little bit just due to the bounce in the market, but the overall market sentiment remains relatively same, which is kind of between weak and oversold. You can see the average is sitting on the lower end of the week time frame. Moving over, the thing I want to talk about today centers around the concept of max pain. And what max pain means, this is the point at which where options traders would experience the maximum amount of losses. So I'm sure you're probably aware of this, or have maybe heard this at points in the past, where people like to say that the market always inflicts the maximum amount of pain. And so this max pain indicator is essentially a way of showing where that would be, right, based on current points in time. So what we can see here is the current max pain indicator here. This has to be some way that they've formatted the table, this number down here. I'm assuming this is probably a weekly date, if I had to guess. But this is probably something to do with maybe like block height or whatever. But I believe they calculate this on a weekly basis. All to say, like, this essentially shows us where maximum pain would be. So as you can see, it was when people were more bullish on the market, the point of maximum pain was higher, and then the market obviously moved up. Another thing to notice here is the green bar, which is the notional value. This is essentially the volume in which, like, the amount of, or I guess the volume of losses that people would be incurring. So as you can see right now, the volume of losses that people would be incurring is relatively low. That makes this indicator, at least at this point in time, not super valuable, purely just because there's not a whole lot of volume, mainly because most of the leverage and the speculation in the market has been wiped out due to these very, very strong moves over the past couple of days. So you can see here in Bitcoin, we're sitting at 60,000, which, again, if you subscribe to the notion of max pain, that would mean we would potentially be seeing a move up in the market because people are more bearish than they have been, at least in recent past. If we look at Ethereum, you can see here we're again, notional value is very low, so the maximum pain is not nearly as much as what it would have been down at this area when we're talking $1 billion. Here we're only talking about 50 million or so. But what we're seeing here is the $4,000 price target. So this again would, again, if you subscribe to the notion of max pain, this would indicate a move up in price overall. So now one thing I can show you is this liquidation heat map. This is something that we can kind of use to indicate where we've got big walls of liquidity. And if market manipulators or market makers are trying to manipulate the market to essentially hunt stop losses, we can find where they are. This is also another indicator of max pain in a sense as well, right? As we can see here up at the heat map, there's a lot of liquidation, or there's a lot of stop losses up here. And so this is essentially where people would get liquidated or stopped out or lose their leverage, essentially. So based on this heat map that we're seeing here, it looks like the most painful, or like the highest number of liquidations that we would see it's kind of somewhere between this like 57.8 and like 58,200. So essentially right around like, 58,000, give or take $200. This is where, a lot of that liquidation would be seen. Anyway, one thing that, we're noticing in the market here is there's a lot of manipulation going on, and there's a lot of fear, not necessarily based on any rational sort of actions or things. We're seeing a lot of very dramatic moves in the market. They're going, the market is fluctuating very rapidly from, one price to the next over relatively short periods of time. But one thing that, is a relatively new thing in the crypto market is institutional money, right? And also institutional access to crypto, Bitcoin and Ethereum specifically. So one thing that we can look at here is the ETF premium discount to net asset value. So essentially what this means is, since these ETFs hold Bitcoin or Ethereum, in this case, we're looking at strictly Bitcoin. But in this case, since these companies hold Bitcoin, they're not buying Bitcoin directly, right? The asset is backed. But what that means is there are certain short periods of time where the asset can depeg minorly, because the ETF would need to then go buy more Bitcoin. Let's say if $1 billion flows into this ETF and they only have 800 million in reserve, then now they need to go buy another $200 million worth of Bitcoin to properly collateralize the ETF with the demand of the market, right? This premium discount chart essentially is a factor of that. So if we look at the most recent day, we can see that, there are a couple that are sitting almost right at 0%, which would mean the value of the ETF is the value of the Bitcoin collateralized in there. But you can see particularly IBIT, which is BlackRock's, and BlackRock is the largest Bitcoin ETF. You can see that they're actually almost trading at a 1% premium to what Bitcoin is currently. This is important to know because I use it as a gauge on institutional interest in Bitcoin and crypto more widely, right? And so what we're seeing here is, even though the prices have moved very dramatically and there's a lot of fear in the market, what are we seeing that institutional money is doing? They're buying. And not only are they buying, they're actually paying a premium to get in at these prices. So this to me is actually a very encouraging sign as far as the overall state of the market. Even though there's a lot of fear and there's a lot, we've seen a lot of negative price action in the past couple of days, institutional money is actually very, very happy with that price action, right? And they're actually willing to pay a premium for that right now. So as you can see, this kind of is going back a couple of days, August 1st. So this is Friday. This is when things started to go poorly. We were seeing everything was trading at a discount. Now, when the prices have come down dramatically, they're actually trading at a premium, which is encouraging. So the other thing I wanted to bring up as well is a development in the market regarding the Fed. So as we all know, the Fed plays a very, very, very heavy role in the market and essentially the amount of money that the market has to spend. So what we just received, well, I guess about a week ago at this point, we got word that the Treasury is essentially looking to buy back. They're turning the money printers back on, essentially, right? They're starting to buy back these coupons at various rates, right? So you can see, $5 billion has been allocated to buy back 1 month to 2 year nominal coupons. These are just T-bills, but you can see, another $2 billion for 20 to 30 year. Again, another, $5 billion for 1 month to 2 year again. This is all essentially $50 billion, I believe is the total here, has been authorized for the Fed to go and start releasing this money into the market again. If you guys don't remember when Bitcoin went parabolic last, this is why. The Fed was essentially printing an insane amount of money. There was the COVID crash. People were getting their stimulus checks. If you're American, I'm not totally up to date with what was going on in the rest of the world, but at least for Americans, we were getting our stimulus checks. There was a lot of money being thrown into the ecosystem. Interest rates were, near zero, if not zero. There was a lot of things going on that essentially made money very, very cheap. and devalued the dollar very greatly. That was part of the reason for the massive run up that we saw in, both Bitcoin as well as all of the alts. So, this is something that I'm looking at as actually an incredibly encouraging and positive development, because this is quite possibly going to pump our bags, right? So, something to consider, not only is, where we're at in the crypto market and how things are developing there, but also just how the market is doing in a macro sense as well, because, obviously crypto is still a very small piece of the overall global market. And so how the global market moves will impact the crypto space just as much as anything else. So overall, if you found the information shared in this video helpful, please go ahead, like and subscribe. Also share with anybody who you think might also find this valuable. One other thing to note as well, nothing that I've said in this video is should be taken as financial, legal, or tax advice. Listening to somebody on YouTube would be a terrible investment strategy. And if you think you're going to get rich following the thoughts of a YouTuber, I don't exactly know how to help you. A lot of us, nobody knows where the market is going to go, right? And so these are just my opinions. This is some of the support that I have found to back up my opinions. But overall, it really, no one knows where we're going, and there's a lot of different things that can change over time. So anyway, thanks for tuning in, and we'll see you in the next video.